Have you ever wondered what type of investor you are? Well, in today's video, we're going to be covering the 6 most common types of investors, as well as the characteristics of each one and the details surrounding each type of investor. This should help you identify the type of investor you'd like to be. So stick around to hear more. Hey everybody, it's Graham here and welcome back. Today we are going to be looking at the 6 most common types of investors. So if you're a beginner and new to investing, or you've been at it for a short period of time, maybe this video will help you decide where you fit in or where you would like to fit in as an investor. If I had to categorize myself as an investor, I typically fall into multiple areas, as I cover more than one type of investor. So let's get into it. So the first one is a dividend investor. As a dividend investor, you are typically shooting for passive income. Being this type of investor, your aim is to invest into as many companies as possible who will provide a recurring, reliable dividend. Now the key here is reliable and not so much of a massive dividend. But who would complain if they did pay out a massive dividend? I certainly wouldn't. Reliability in dividends is the main aim, as you would like to know no matter what happens, no matter how bad the economy, no matter what crazy things happen in the world, the company that you invested in will pay you a recurring, reliable dividend over and over and over again without fail. Capital appreciation in the stock is a nice cherry on top, but you want the income. When doing your research on this, you will research companies that have multiple consecutive years of paying out dividends. Typically, you are trying to find a company that is known as a dividend aristocrat or a dividend king. A dividend aristocrat is a company that has paid and increased its base dividend each and every year for a minimum of 25 years. These include companies such as Walmart, AT&T, ExxonMobil, and Caterpillar. A dividend king is a company that has paid and increased its base dividend each and every year for a consecutive 50 years or more. Dividend king companies are companies such as Coca-Cola, Johnson & Johnson, Procter & Gamble, Colgate-Palmolive. Number 2 is a growth investor. As a growth investor, you're wanting to invest in companies that have the potential to drastically grow in value and market share. When this happens, the stock that you purchased in the company will also grow at a drastic rate. In this area, investors typically try and find that company that can disrupt the markets and ultimately have huge upside potential. These sectors are generally your tech companies, your renewable energy, or even your space travel, just to mention a few. To show you a few examples, if you manage to invest a fairly large sum of money into these companies when they first started, you would be stupid rich right about now. In looking at Facebook, you've got here the listing price when it first came out is sitting at $38.23. That was on the 18th of May 2012. Now if you're looking at the steady growth throughout the years, you can see it's constantly moving up with a few little downs here and there, but overall the trend is moving upwards. And you can see the current price as it stands is sitting at $324.90. So the value of a Facebook share has almost times 10 since the day it was listed. When taking a look at Apple, you can see that the listing of the stock was at 13 cents, and that was on the 8th of May 1981. Since then, it has constantly grown, and you can see this massive surge over here over the last few years, and it's currently sitting at $131.46. Now that has grown thousands of percent since it was listed on the stock exchange. So if you were lucky enough to have bought in back in the early days, you would be sitting very pretty right about now. Also taking a look at Tesla, you can see the listing price here was $3.84, and that was on the 2nd of July 2010. Currently the share price is trading at $709.44. So this has also grown drastically and thousands of percent return on this investment if you are lucky enough to get in there from the start of the company. These are just a few examples of stocks that a growth investor would purchase into and over time reap the rewards. Number 3 is a value investor. When it comes to value investing, I think one of the most well-known investors in this space is Warren Buffett. What Warren Buffett does, and any value investor, is they'll try find a company that is very undervalued at that point in time. They will then analyze the financial details and any financial metric of the business at the moment. And what they are trying to do is find a value of it now versus a possible value of it in the future. Once doing this research, they can then identify what the true value of this company is, and whether that current price of the company is in fact its true value. If they see that the company is undervalued based on its current share price, they'll then buy into that price now and reap the rewards in the future once the value of the company grows. As you can see now, this graphic shows the net worth of Warren Buffett over his investing years. The current picture shows from age 14 through to age 89. Warren Buffett is currently 90 years old, so this is a year out of date. Even though this graphic is slightly out of date, you can see the purpose of value investing, and it's shown on Warren Buffett's net value year on year for his investing years. The point I'm trying to bring across here is when you get into a company knowing that its intrinsic value is so much less than what it could be, and you invest at that point in time. That's exactly what Warren Buffett's done year on year, company after company. And you can see that all of his investments have paid off dramatically at this point in time. I know at age 14, his initial investment value at that point in time was about $5,000 or $6,000. On this graphic, you can see at age 89, he's sitting with $83 billion at that point. So he has moved from $5,000 or $6,000 all the way through to $83 billion in that period of time. And that is just by buying companies knowing that the value is so much cheaper now than what they should be in future. And then also selling them off later on at a much higher price, maximizing his return on investment. The prior graphic showed up to age 89. He is currently 90 years of age, and as it stands, he's sitting at $103.7 billion. So in the last year, he's made roughly $20 billion based on all his investments. That is the power of value investing. Number 4 is a speculative investor. This type of investor is not really scared of the risk side of things. They know that the risk is definitely there, but they know that the potential to outweigh the risk on that investment is so much higher. In some aspects, this might be the gambler of the investment world, but they're kind of the ones with the big cojones because they do trades that most people probably wouldn't do. This type of investor will invest in things such as penny stocks or cryptocurrency. These investors invest in markets that are highly volatile, and with that volatility comes high risk but also high return. The growth in these types of assets may come down to what the company may have in its pipeline moving on into the future, or the growth can be based on rumors on social media and news networks. With these, there is clear speculation that something may or may not happen in the future, but the news and rumors will impact the price of the stock or cryptocurrency today. For example, when it comes to penny stocks, there could be a pharmaceutical company with rumors of FDA approval coming soon. Or in the cryptocurrency world, there could be something as simple as a tweet on someone's profile that'll send their cryptocurrency through the roof. As you can see on screen, an example of that is Elon Musk with these graphics over here that he's done, which is quite classic actually. Me being a fan of Lion King, the one on the top left is obviously my favorite. But just seeing this on his Twitter profile, smashed Dogecoin or Doggycoin, however you want to pronounce it, smashed it through the roof. I mean, some days it went up 500-600%. So I gotta say thanks to Elon, because I have made some good profits off of him, so thanks bud. So I'm sure there's a lot of people out there who would like to thank Elon for his punting of this cryptocurrency. Other people probably not so much, because they probably purchased at the high and got dumped on completely, but anyway, that's the name of the game. And one thing with speculative investors, they can have days where they have 500%, 1,000% or even higher percentage returns on a given day. However, they know that the risk is there to lose their entire investment. Number 5 are income investors. In line with that of a dividend investor lies the income investor. In this case, this type of investor will be buying into income index funds or income ETFs. An ETF is an exchange traded fund. Institutions out there will put together an ETF, and the sole goal of this ETF is to provide an income to all of its investors. These types of funds provide a very high yield. Some of them can range anywhere from 3% to even 20%. And depending on the fund, most of them will pay out on a monthly basis. Some can be quarterly or a little bit longer, but the aim of these funds is to pay out income to an investor on a monthly basis. The main aim of an income investor is to have that monthly return over and over and over. And in most cases, these types of investors will not focus on any capital growth whatsoever in this fund, because chances are there won't be any capital growth in these funds due to the nature of them paying out on a monthly or quarterly basis. Number 6 is a seasonal investor. This type of investor will identify that a stock does very well at a certain portion of the year and not so well at another time of the year. An example of this could be a travel company, where this investor knows that at a certain time of the year, the demand for travel is a lot higher than other times of the year. So what this investor will do is will buy the stock of the company when they know that the demand is low and the price of the stock is also at its lowest. And then when they know that the demand increases, whether it be summer months, holiday months, and so forth, they'll then sell that stock at that level, maximizing their returns. As a bonus, investor type 7 is known as a hybrid investor. So as an example, if I look at myself, I would be classified as a hybrid investor. The reason for this is I cover dividend, growth, as well as speculative investing. When it comes to my dividend investing, I have that dividend reinvested into those stocks automatically each year. I'll keep doing this until such time as I want to pull those dividends out on a monthly, quarterly, or yearly basis. Other stocks and cryptocurrencies I hold for the long term, knowing that the value will get bigger and bigger each and every year, and I will then cash out at a later stage. And on the speculative side of things, I generally do low cap stocks, or the biggest portion of that is cryptocurrencies. Being a hybrid investor allows for some form of diversification. This type of diversification surrounds the type of asset as well as the risk profile associated with that particular asset. Comment down below and let me know the type of investor that you fall into. I'd really love to hear from you. I hope you enjoyed the video. If you did, please hit that like button, subscribe and smash that notification bell so that you don't miss out on any content I release in the future. Thank you for watching, everybody. Stay safe, take care. We'll catch you soon. Cheers for now.